Hello and welcome back to Global Value. In today's video, we're performing a fundamental stock analysis of STAG Industrial Inc., ticker symbol STAG, STAG. So we're looking at the company today as a subscriber request. STAG Industrial is a real estate investment trust that's currently trading for $34.11 per share. Over the last year, their stock price is down 10.5%. Going back over the previous 5 years, STAG is compounding their stock price at a rate of about 7.5% annually. Over 10 years, they're compounding their stock price at 5.5% annually. And going back to when the business was publicly listed a little under 12 years ago, STAG Industrial's stock price is compounding by about 9% annually over these last 12 years. Additionally, because the company is a REIT, they have to pay out 90% of their taxable earnings as dividends to shareholders. And the company currently has a significantly above average dividend yield of 4.2% right now. Their average dividend yield throughout this period would be added on to this compounded annual return. So currently, STAG is trading about $8 below their 52-week high. They're up about $10 from their 52-week low. And this is a moderately sized business. They have about a $6 billion market cap. So for more background about the business, STAG Industrial Inc. is a real estate investment trust that is involved in the acquisition and operation of both single and multi-tenant properties, although the majority of the portfolio is single-tenant industrial properties throughout the United States. The vast majority of the company's real estate portfolio is comprised of warehouse and distribution buildings. STAG Industrial derives nearly all of its income in the form of rental income from its portfolio of warehouse and distribution properties. The company generates most of its rental revenues from its facilities located in Midwestern and Eastern U.S. cities. STAG Industrial's largest customers include air freight and logistics, automotive, and industrial equipment companies in terms of overall revenue. So for our fundamental analysis today, we are performing the Select 6 analysis, taking a checklist-style approach of 6 standard financial metrics, which we're going to modify slightly for a REIT, to come to a holistic and beginning understanding of STAG Industrial based off their business fundamentals. So this analysis is still a work in progress, and it's an opportunity to learn in public, so it will continue to improve and get better over time. And I'm always looking for feedback on it. So with that said, let's get right into today's analysis. Starting things off with metric number 1, we want their average return on equity over the last 5 years to be above 14%. If this is the case, this will potentially build in some margin of safety for ourselves by looking for a benchmark that's about double the average returns on equity from a typical company. STAG Industrial's return on equity has fluctuated somewhat over these past 5 years. They peaked at about 8% returns in 2020, and since then they've actually been declining somewhat. Overall, throughout this time frame, STAG Industrial is averaging about a 5.5% return on equity in a given year over the last 5 years. So this is slightly below average, and that's not atypical for tangible real estate assets. But this means that this is going to be an X to start things off here on metric number 1. Next up for metric number 2, we're taking a high-level overview of the growth of their business. So we're looking for revenue, net income, and cash from operations growth over the last 5 years for a REIT. This metric will be all or nothing in nature. Either all 3 of these are going to be up for this to be a check, or if even one of these is down, this entire metric will be an X. So over this time frame, STAG has grown their revenues by 92%, so their revenues have nearly doubled. The company has made quite a large number of acquisitions over this period, so they've really increased their property count over this time frame. Additionally, their earnings are up 91%, and their cash from operations have grown 96% as well. So across the board here, their revenues, net incomes, and cash from operations have all almost doubled. This has been strong growth for STAG Industrial over the last 5 years, and this is a check on metric number 2. Again, however, a significant portion of this growth is coming from the acquisitions that the company has done. Next up, for metric number 3, here we're taking the perspective of an individual shareholder in the business by looking at STAG Industrial on a per share basis. So we're looking for earnings per share growth over the last 5 years for the business. So in our previous metric, we learned that their earnings have nearly doubled over the last 5 years. However, earnings are just the numerator in this earnings per share equation. So we also want to look at what they've done in terms of shares outstanding. Over the last 5 years, STAG Industrial has issued about 72% additional shares outstanding. So they've been massively diluting shareholders, which is something that we ideally don't like to see in a business. It's often the case that we would rather have businesses, if they're going to be acquisition focused, making these acquisitions in cash. However, because these are real estate assets, this may be a little bit of a different situation for STAG than it would be if another type of company was making acquisitions like this. It's potentially the case that many of these deals were off-market or private market deals, and depending on the price that was paid for some of these properties relative to the valuations of STAG Industrial at the time, this may not be as as bad as it would necessarily seem, especially because they're purchasing tangible real estate assets. Even with their additional shares outstanding, their earnings growth is still outpacing this. So this has led to earnings per share growth here for shareholders. Over the last year, the company earned $1 for each share that they've had outstanding, and this is a check here on metric number 3. Next up, for metric number 4, here we're looking for something similar. So here we're looking for free cash flow per share growth over the last 5 years for STAG. So with a very similar story to their earnings, their free cash flows are up significantly over this time frame, and they're outpacing their shareholder dilution, meaning that their free cash flows per share are up over this time frame. This is a check on metric number 4. In the last year, STAG Industrial produced $1.90 worth of free cash flow for each share that they had outstanding. And so to recap where we stand currently, through our first 4 metrics, we have 3 checks and only 1 X for STAG Industrial. Next up, for metric number 5, here we're evaluating how the business is utilizing debt. So we don't want to be investing in overly levered businesses, because during economic downturns, it's overly levered businesses that are going to be at the greatest risk of poor outcomes. So we want their net debt, which is their total debt minus their cash and their short-term investments, to be below the amount of cash from operations that a real estate investment trust has produced over their last 5 years. STAG has added on to their net debt position over this time frame. They've nearly doubled it, and currently they have $2.4 billion worth of net debt. Over this time frame, the company has only produced $1.45 billion worth of cash from operations. One thing to note here, though, is that this has increased steadily year over year in all 5 of these years. So this has been steady growth in their cash from operations. However, even if we were to extrapolate their current cash from operations out over the next 5 years, this still doesn't look like this would be supporting their current net debt position. So this is going to be an X here on metric number 5. There are reasons here for STAG that their potentially high debt load may not be as much of a concern as it would be if this same debt load were applied at another type of business. This has to do with a number of factors, one of them being that real estate assets generally are able to take on more leverage than other types of assets. And if you're potentially concerned about their debt profile, you would just want to dig into the company to learn more. In their filings, they'll break this out in more depth, and you'll get a better sense of how this debt is structured, when it matures, what rates it's at, and if there are any specific covenants applied to their debt. Either way, though, again, this is a X on metric number 5, and so far we have 3 checks and 2 X's for STAG. One other bonus thing we want to point out for the business is that over the last 5 years, again, STAG has been heavily focused on acquisitions. So currently the business has a $6 billion market cap, and over the last 5 years alone, STAG Industrial has purchased $4 billion worth of real estate assets. They've acquired nearly 2/3 worth of their current market cap in the last 5 years alone. So that is something you want to be mindful of here for the business. Then our 6th and final metric, the big metric of them all, we want their average cash from operations over their last 5 years to their total enterprise value to give us a yield that's above 5%. If this is the case, this may potentially offer us a slight risk premium to the yield of the 10-year treasury, and potentially offer us a reasonable starting point for a fair value for STAG Industrial. Currently, STAG has an $8.6 billion total enterprise value, and we're using their enterprise value here because it takes into account both their market cap and their net debt position, and it's going to give us a perspective of the business that's more similar to as if we were looking at STAG as a private company. Over their last 5 years, we learned that the business produced $1.45 billion worth of cash from operations, meaning that in an average year, STAG Industrial is producing about $290 million average cash from operations. So when we divide their $290 million of their average cash from operations by their $8.6 billion total enterprise value, that is only going to give us a 3.3% average cash from operations to enterprise value yield for the business. So this is slightly below the yield of the 10-year treasury, and this is also well below that 5% risk premium we're looking for. So on an average basis of their cash from operations here, this is an X on metric number 6 for STAG. One thing to be aware of is that, again, they've grown their cash from operations steadily in all 5 of these years, and they've made $4 billion worth of acquisitions over this time. So in their most recent fiscal year, the company has produced $388 million of cash from operations. And so to get a current cash from operations to enterprise value yield for STAG, when we divide their $388 million of their current cash from operations by their $8.6 billion total enterprise value, that gives us about a 4.4% current cash from operations to enterprise value yield for the business. So while that would be above the yield of the 10-year treasury, that's still below that 5% risk premium we're ideally looking for. So just because this is an X here on metric number 6 doesn't mean that you're going to toss this business out in its entirety. This analysis is not a buy or sell recommendation of any security, and it's not financial advice. And this is just one of our 6 metrics. While these metrics are simple, when they're combined together, they can be very powerful. And we've still got some interesting aspects of the business left to cover. Then here as a bonus, we're taking a look at STAG Industrial's dividend profile. So currently STAG is paying out a 4.2% dividend yield. And as a real estate investment trust, they have to pay out 90% of their taxable earnings as dividends to shareholders, which will exempt them from most corporate taxes. Even though they have an above average dividend yield, we still want to look at their dividend profile because people make mistakes all the time by blindly chasing dividends, so it's important to stop and look at the underlying fundamentals of a business to determine whether they're healthy and whether they're able to support their dividend payouts. STAG has only supported their dividends in 1 of these 5 years with their free cash flows, meaning that their dividends would have been supported through some other means in these previous 4 years. Again, the company has been raising debt and they have been issuing shares throughout this time frame. The company has very slightly grown their dividend payouts per share in all 5 of these years. Again though, we'd ideally want to see that their dividends are covered by their free cash flows in all 5 of these years. Then everything we've discussed so far is important, but there's something missing that in my opinion is the main reason to analyze STAG Industrial, which takes us on to using a discounted cash flow model to come to a potential fair intrinsic value for STAG Industrial. So a discounted cash flow model is just like any other model in any other discipline. Its outputs are going to be sensitive to its inputs. So here we're starting with their current free cash flows per share, and then we're using historical growth assumptions for how the business has grown these free cash flows since the business went public nearly 12 years ago. So it's up to you to determine whether or not these historical growth assumptions are going to be accurate and applicable going forward over the next 20 years to give us a baseline projected estimate for the company. But if we assume that they grow their current free cash flows at a rate of about 3.5% annually over the next 10 years, then this slows down slightly where the company grows their free cash flows at a rate of 3% for the 10 years out after that. If we add in the company's tangible book value, which gives us a perspective of the company's tangible net worth, and we were ideally seeking a 15% rate of return for STAG Industrial, which is the rate of return that Warren Buffett is ideally looking for from his investments, in addition to his margin of safety requirements, which are based off the dynamics of the industry that the company operates in, as well as their durable competitive advantages, then it looks like a potentially fair intrinsic value for STAG Industrial at today's valuations of the business is right around $31 per share. This is just $3 below the company's current stock price, but this is well within the range of where the company has traded over the past year. Keep in mind that we would not be doubly counting dividends, so their 4.2% dividend yield would be included in this 15% rate of return, and this 15% rate of return would be slightly outperforming how the business has performed over the last 12 years since they went public. Keep in mind that a discounted cash flow model is based off the predictability of a business's future free cash flows, and while STAG Industrial seems like it has had higher degrees of business predictability than some other types of companies over the past decade, this may not necessarily be the case for the company going forward into the future. So please be mindful of the fact that this type of analysis is not financial advice, it's not a buy or sell recommendation of any security, and before considering any potential investment decision, please consult with the properly licensed and registered legal and financial professionals. So in summary, STAG Industrial checks the box on 3 out of our 6 metrics today. It looks like the company is moderately attractive for further research. While they earned below average returns on equity, they have really been focused on growing aggressively over the last 5 years. They've diluted existing shareholders by 72% over this time frame, and they've made more than $4 billion in acquisitions over the past 5 years. However, this has led to their revenues, earnings, and cash from operations all nearly doubling over this time frame, and the company is still growing on a per-share basis as well. While it does look like the business is utilizing more debt than we're ideally looking for, there are reasons, some of which we touched on, why this may or may not be a potential concern for you. And so if you're interested in learning more about their debt profile, you would just want to dig into the company in more depth. It looked like both on an average and a current basis of their cash from operations to their enterprise value yield, when we compare that to the yield of the 10-year treasury, that STAG Industrial was not giving us that 5% risk premium we were ideally seeking. And looking at the company's dividend profile, it looked like they only supported their dividend payouts with their free cash flows in 1 of these previous 5 years. Finally, performing a discounted cash flow analysis of STAG Industrial. If you've done the work and you believe that those historical growth assumptions are accurate and applicable going forward for the business, and if you were ideally seeking a 15% rate of return from the business, then it looks like a potential fair value for STAG Industrial was right around $31 per share based off today's current valuations of the business. So again, it's worth reiterating that this type of analysis is not financial advice. It's not a buy or sell recommendation of any security. This model is based off assumptions that you need to do your own homework on. And before considering any potential investment decision, please consult with your financial advisor. Instead, this analysis serves as a beginning and holistic understanding to help you determine whether it's worth your time and energy to dig in and learn more about STAG Industrial. One resource that will definitely help you stay up to speed with what's going on in the market and help you learn more about the business is Seeking Alpha. Checking out Seeking Alpha directly supports the channel as I'm part of their affiliate program. So most of you probably know Seeking Alpha as a source of community-written articles on different stocks. But over the past little while, they've actually become a lot more than that with their new offering, which is Seeking Alpha Premium. Premium has a number of different features where you can track buy, hold, and sell ratings on your favorite stocks. These ratings are from the Seeking Alpha community, Wall Street analysts, and Seeking Alpha's algorithm. You can see earnings call transcripts, investor presentations, SEC filings, and press releases all in one place. You can add your own margin of safety targets and get alerts for when your favorite stocks hit that level. You can get unlimited access to Seeking Alpha articles, and you can tailor your reading experience based on the type of investor you are. You can get 10 years of financial data on any stock to help you with your analysis. You can also import your portfolio into your Seeking Alpha dashboard to make researching easier. And if that didn't convince you, the best thing is that an annual plan is only $119. That's just 33 cents per day through my referral link down in the description below. Normally premium is $239, but if you use my link, it's 50% off. So check it out if you're interested. So through this deeper research, you'll learn more about the qualitative and the quantitative aspects of the business, and you'll likely be able to determine for yourself what a reasonably fair intrinsic value for STAG Industrial will be. So as a value investor, you're ultimately trying to conduct this research as if you're going to own 100% of a business, and you can truly understand the ins and outs of the company and understand what's important and what's not important for the business going forward. So with that said, that's it for today's fundamental stock analysis of STAG Industrial Inc., ticker symbol STAG, STAG. Again, we looked at the business today as a subscriber request, and STAG checks the box on 3 of our 6 metrics, meaning that the company looks like it's moderately attractive for further research. So if you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next time. Thanks for learning about STAG Industrial with me, and have a great day.